Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today, we're going to answer the question as to which chart is the best type of chart. But before we start, you know the drill. Make sure to like and subscribe, especially if you find value in this presentation. So, we're going to discuss types of charts here in this presentation, but we're going to delve into them, and we're going to discuss the demerits and the benefits of each one, and what is the best chart out there. Now, I know of 6 to 7 types of charts besides the 3 most common ones that are in the marketplace. But for all intents and purposes, I just want to highlight something before we start, is that there is something lost in any kind of translation. When we are going from English to Spanish or Spanish to English, you lose some element, some quality in the transmission, in the translation, and this happens with charts as well. And so what does that mean when it comes to charting? So for example, if you've ever seen quotations on the marketplace and you see them in real time, you could sometimes see something jumping and the numbers jumping in real time, and you see the players, it's just a little bit more, in the game, so to speak. You're as opposed to watching the game, you're really like watching it on the field. I don't know how to describe it better than that, because what happens is that many times when there are market makers and they're trading, okay, and the marketplace is trading, and you see the quotations in real time and you see the executions in real time, you see like in the ballpark, you're like have front row seats, and it's like as if you're in the ballpen, just being part of the game. And the reason is because you see the velocity, you see the changing in numbers, you see the players, and you see their sizes all at the same time. Now, however, when you take that information and you plot it on a chart, there's going to be something lost. There's that real time, real essence kind of feel to the marketplace that's going to be lost. Nothing you could do about it, okay? Unless you have that type of software. Most people don't. Unless you're a market maker, you have to just suffice with the charts, okay? I trade the charts. Most people trade the charts. Most technical analysts trade the charts. So it's not like as if, all game is lost, but there is a little bit of I don't want to say a lag time, but there is a little bit lost when you're not having the finger on the pulse like you do when you see the market actually in quotations. However, just keep in mind, when you do that, you have a hard time to just step back and see the full picture because you're so in the game. So it's sometimes easier for you as a spectator watching a game as opposed to playing the game. That's clear, right? So with that said, just take that for the grain of salt. Now remember also that there's a lot of data that these software have to then transmit from the actual trading place, okay, all that trading data, and plot it onto a chart. So there is going to be something that's lost. Most charts are really bid prices only. Remember, there's a bid price and there's an ask price, and usually there's a difference between the two, which we call as the spread. Now, to plot a bid and a ask price on the chart, too much information. It's going to be everywhere. It's going to be looking like this, right? There are some computers out there, there's some computer software that does plot both in shorter time intervals, but longer time interval, it really doesn't make that much of a difference. Okay, so let's just digest straight into this and discuss the different types of charts. Okay, so the first one is what we call a candlestick. Okay, Japanese candlesticks. It was developed sometime in the 15 or 1600s it was, and it kind of evolved into something that most technical traders use as the go-to. The other two is a bar chart or a high-low chart, and the last is a line chart, okay? And this is usually the order of preference that I would use in which type of charts I would use, okay? So the first one is really, let's digress from the least one to the best one, is a line chart. Now, a line chart is just a plot of a line, okay? It doesn't give you much more information than that. That's the demerit in it, okay? At any given time, it's giving you an average price, okay? So it's almost like a moving average, so to speak, because it just plots one spot, okay? You don't know in that interval how much it traded up or down. It just shows you that one spot. So yes, is it easier to read? Yes, but is it giving you the full information? No, okay? And that's why people don't necessarily go to it. Now, if you want to plot a trend upwards, downwards, you want to see where something is trading in a range, A line chart is really great. Just gives you a perspective of where we're trading at the market at any given time. So it is used in the grander scheme of things, but when it comes to actual trading and using it as a barometer, it's really a very difficult chart to use to make executions, especially if you're scalping and especially if you're trading in swing type of trades. Like if you're trading as an investor, yeah, you could probably use it. But if you're trading in and out and you're trying to get, that extra 25 cents or 30 cents, and that makes a big difference to you, then you don't want to use a line chart. Okay, the next one is a high-low or a bar chart. Now this gives you a little bit more information, gives you the open price and the close price with 2 indentations from the sides and gives you a straight bar in the middle. The benefit of it, it gives you almost all the information. Everything is there. How much it traded during the range of that time period, okay, of that period that you're looking at. Could be a minute, could be 10 minutes, could be an hour, could be a day, okay? So it gives you that entire time, and it tells you from the time that it opened to the time that it closed, how far it traded, okay? So it's really great like that. However, it has some limitations visually. And it doesn't by itself have its own rules, okay? Where when we get to candlesticks, okay, this is really the best form of chart reading that you can employ because the candlesticks themselves have their own rules and own laws and own shapes and own formations that do replicate. And they, together with technical analysis, give you much more proportionally a better edge at entry and exit levels. Okay, that's what I'm talking about. If you are really particular about entry levels and exit levels, about when to enter and exit the market, candlesticks are really the most useful, and it's really very helpful for those that are going in and out. Okay, now I use it on the daily review. I trade on it. I teach people about different type of formations of candlesticks. So there's a lot of information that you could utilize using candlesticks, okay? It has been the prominent, most used form of charting when it comes to actual day trading and swing trading than any other charts. Thank you for joining me this segment of Technical Analysis and Technical Tuesdays. We'll see you here next week.